So every 2 weeks, we talk about a different topic here. This week, we're going to do the 7 biggest mistakes by beginning real estate investors. So thanks so much for being here. Hopefully, there'll be something in here today that you've not seen before and that you'll learn from it. Come back to more meetings in the future. And as I mentioned, I'm meeting a few more people. I'm just going to keep everybody on mute. I don't have a team. Again, there's nothing here. There's no salesy pitch here. This is just Andrew Postel talking about real estate investing, okay? So this is the Drew 2. So what is the Drew 2 exactly? Well, the Drew 2 is me. I'm Andrew Postel. I have 20 years of real estate investing. I'm also a loan officer, but this is not about loans or lending. I mean, of course, I'd love to work with you, but this is about real estate investing. I lend in all 50 states. I'm in the top 1% of all loan officers in the country. And when we talk about real estate investing here, this is residential real estate. If you came here looking for triple net leases, I mean, it's cool, but we do 1 to 4 family unit stuff. You can also follow me on Facebook and Instagram. My contact information is right there on the screen. You can call me. That's my direct number, my email. Yeah, reach out anytime. All right, so let's get into it. What is real estate and why do we invest in real estate? Right? Why do we choose real estate over other investment strategies? So real estate, I get rental income. I've been doing real estate for 20 years. Every year, I increase my rents. That's my hedge against inflation. When inflation is around, and it always is, it's always around, I get to increase my income, which is a hedge against inflation. It helps combat inflation. I also have appreciation, meaning my property value increases. Maybe not every year, but more often than not, I'm increasing in value. I also have principal buy down. I cannot purchase homes in all cash. I mean, who has hundreds of thousands of dollars just laying around? Nobody. We have to have a loan. I don't pay the loan. My tenant pays the loan. I'm millions of dollars in debt. It's kind of crazy for me to say, but it doesn't matter because my tenants are making the payments. And I get tax benefits. I've never paid income tax. Yeah, that's the right word. I've never paid income tax on my rental properties. Why? I'm not hiding anything. I haven't paid income tax because I get to deduct all of these wonderful things when I own real estate. This is why we invest in real estate over other platforms. And I get it. I also own stocks. I even have some crypto and some other things. And these other avenues, I can buy a stock for $5. It's hard to buy a house for $5, you know. So I can make a pro or con against a lot of these things, but I believe in real estate. Vast majority of what I do is in real estate, and these are the 4 reasons why. Now, if you're new to this, what are some of the most common mistakes I see people make? And I've seen a lot. Let's cover number 1. So mistake number 1, thinking you're going to get rich quick. Man, does this one frustrate me because I see this so much. Everybody talks about real estate. It is not a get rich quick scheme. You're not going to get rich quick. You're just not. This is time value. It works over a long period of time. You're planning on the future. Only 4% of Americans own 2 homes. 2. That's very rarefied air. Not everybody does it because they can't get rich quick, even though somebody out there might sell their little program on getting rich quick. I've heard them. Trust me, I've heard the same thing you have heard. Oh, just sit back and collect mailbox money. Well, that sounds nice. If you're a millionaire already, you can do that, I guess. How do you make $1 million? You spend $2 million. That's how you do it. But if you're the regular average person like the rest of us, it takes time, and it takes a lot of time. And no guru can make it come quicker. And the other piece of it too, ooh, do I really want to say that it's really hard? It's hard? Yes, it's hard. That's why only 4% of Americans even have 2. It's very hard to do. But if you can do it, and you can, it can change your life. All right. There's a method that I taught a few weeks back, how to make $100,000 a year on fixer-upper rentals. You buy a home, you wait 5 years. Who wants to wait 5 years? Nobody does. But if you can wait that 5 years, well, you can net 100 grand. But nobody wants to wait 5 years. If you want to look more about this, all right, this is why you follow this group, because I talk about these types of subjects. You can go to Bigger Pockets and search for how to make $100,000 a year on fixer-upper rentals. Brandon Turner taught that class. Go look at it if you want to see the technique. But that's why people don't want to do it, because nobody wants to wait 5 years. You can't get rich quick. That's mistake number 1. Ready for number 2? All right, mistake number 2. You're thinking that you can do it alone. Now, I'm hoping that if you're already here, you know that you can't do it alone, because that's why you're networking. In a way, we are networking in virtual space here. So, and it sounds weird, but other investors are willing to help out with this. This is why there's so few of us, right? We have to band together to share ideas. And don't get me wrong, I'm also interested in learning about what you are doing. I want to get better too and make more money. So of course I want to hear what you're doing. We share ideas. Your net worth comes from your network, your vendors, your properties, everything about this. Your education comes from people who knows you. All right. Who do you know as well? But who knows you? One of your skill sets that you'll have to continually do is network. You have to get good at it. Hey, you're a business owner in some respects here, so you're going to have to get out there and network. Real estate clubs, they're already there. This is a virtual real estate club, right? I mean, the Drew too, that's what we are. We're a group of people. We get together, we share ideas. All right, maybe Andrew's just, it's a little one-sided, but I'm at least giving you free information. You can go out there, find others. And there's lots of them that are in person. You can just go to them and meet people in person if you're more comfortable with that. Facebook, Meetup, like the website that we went to here. Bigger Pockets has an actual forum, marketplace where groups post, hey, come visit us. And you can even just Google it. Real estate investor networks close to me, and several will come up. And then you don't have to go to them all, but be just as wary with them as everything else. Some of them will be better than others. And some of them will want you to pay a bunch of money to be a part of them. As a new person, I want you to go to as many as you can. Join the free ones first before you start spending money, okay? I'm saying this for a reason. Thinking you can get rich quick, thinking you can do it alone. 2 of the biggest mistakes. What's number 3? Buying a home and not an investment property, right? I hear this so much. Oh, Andrew, I want this great home. I want it to be in a wonderful neighborhood. I need this blah, 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 school zone. No. That's what you want. You need to think about what the average renter wants. You may not even live in that neighborhood that the average renter lives in. Don't be afraid of the neighborhood. All right, some of them are pretty dicey, but some of them are very nice. They might just be a little bit less than what you're accustomed to. I don't want you to be afraid of that. Right? These are working class neighborhoods that we invest in. The tenants are already living in them, and they're living in some terrible scenario, awful apartment, or some rundown home, and you're going to provide them a better means of life with your rental property. You're going to look at the average person. Okay, so if you had 2 $300,000 homes, you will be way more profitable than just owning one $600,000 home in this nice neighborhood with the great school zones. Don't get your own thoughts about what you want confused with what your customer wants. If you had $200,000 homes, yeah, those rent even better. It sounds weird. It's even better. Now, there's a few people who might be on this call that are in different parts of the country. So let me just share with you something about Texas. So in Texas, we do 3-bedroom, 2-bath homes. And we don't want them to be over 300,000. Because if they're over 300,000, they don't rent as well. And if the economy does get crazy, people downsize into lower valued homes. Most of your blue collar workers with great jobs and good credit rent in this price point. In Texas, well, you don't have to have a new home, but it's nice. Built after 1976 is a bonus. Having a garage is a bonus. And if you're from up north, you're like, you don't have the garages? Yeah, because it doesn't snow here, remember? We don't get snow. We don't need garages. And just like how we don't need garages, we might build a carport here in Texas. And we can't do that up north because the snow will collapse the carport, okay? So each market might determine something different about what you might need in your homes. Basements, attics, lots of different things are out there in the market. So just know what part of the country you're in. If you don't know the price point you need to stick to, I want you to focus on below the median home value, below the median. Okay, I don't know every market. Here I want to encourage people 300 and lower. But if you're in another market that I'm not familiar with, it's below the median house value. That's where we're going to start at. All right, that's number 3. We're going quick. We only got 22 minutes together today. Every time we do this, it's just 22 minutes long, so I get you back on your way. We're just covering concepts, just get your brain thinking about things. All right, so our number 4, not understanding the numbers. I didn't know what this was either. So in the $250,000 home, if I'm using 20% down, that's 50 grand, closing costs 10 grand. If I wanted to buy a $250,000 home as an investment property, how much money do I come out of pocket? With 20% down, that's 60,000. If I'm an average person who didn't come to these types of meetings, who didn't know the BRRRR method or these other techniques, what would I come out of pocket? 60. In theory, anything below 60 is a deal. Now, I'm still not going to want you to buy a home with $59,000 out of pocket. But I just want you to understand that even if you come over your budget, you're going to be fine. Remember what we talked about in the beginning. This is not a get-rich-quick scheme. You're going to buy a property, you're going to hold it. Oh, Andrew, I went over budget, 2 grand. All right, that means you're just going to hold it a little longer, 5 years. So even if you make a small mistake, that's what we want to limit your mistakes to, because you will make mistakes. So don't be afraid of mistakes. We want to limit your mistakes to small ones. When you make a small mistake, and you do, I still do, we're just going to keep our property a little bit longer. That's what knowing the numbers is. Now, also part of the numbers, whenever I buy my primary home, how much money do I need out of my pocket? 5% down as opposed to 20. There's plenty of techniques that talk about buying your primary home and every 12 months buying another primary home. How about the BRRRR method? What's the number that we should target with coming out of pocket on the BRRRR method? I don't know. I like to use 15 grand. Is 15 grand still a lot of money? Yes, it is. Yes, it is. Can you do it better than 15? You can. These are big numbers. But if I'm going to target what to save for and what to plan on, I need to understand that if I can do this, I'm better than the average. Better than the average. That's part of the numbers I want you to get. And there's lots of other different ways of how to buy a property and turn it into a rental. House hacking, I did that for many years. All right, that's mistake number 4. We're going through these at a terrific pace because we've only got a short amount of time together. Number 5. All right, so you didn't know the numbers, and now you're going to get delayed by the numbers. This is the other part of it, like analysis by paralysis. Yeah, whatever it is. What data set do you want? I mean, I got tons of them. There's plenty of numbers out there that will discourage you from buying a property. And not only is it the numbers, but it's your family, it's your friends, it's your spouse. And then when you do buy that first home and you make a little mistake, be like, oh, I told you so. See, you're going to have to ride it out for a long time. 20 years. 20 years. You think my first property was any good? It was not, but it was a great lesson. I didn't have fear. I can teach you every strategy that there is. You want to know all the numbers you can. I cannot teach you how not to be afraid. Okay. Now, if you are afraid and you want to keep your money in the bank, well, we already know the math on that, don't we? Isn't it being eroded from inflation? We have to do something. We have to do something. If I just write it out, I'm going to retire with with not enough money. Fidelity did a report maybe 6 months ago now about what the average retiree does. If you're not a high net worth individual, the average retiree has $90,000. That's the average person. And let me be frank, 90,000 is not enough to live your entire retirement life with. You have to have something else, or else you become a burden to your family. That's what real estate is. There will always be a number that discourages you from doing a deal. All right, number 6, when somebody comes to me and goes, oh, I don't want to invest in my town. my town's terrible. I heard this other town is much better and it's 7 states away. All right. I've been an out-of-state investor for many years. As an out-of-state investor, you may never even see your property. That is a huge amount of trust to leave in people, right? Now, local, right? What if it's an hour away? I can go see my property on the weekends. If it's 2 hours away, and that's still pretty far, but I can still visit. If it's 2 states away, man, that becomes really hard to check it out. Even though you may not be in a market where you can invest in or a city that you can invest in right now, I want you to think about things that are a little bit outside of the range before you go out of state. Now, this middle picture, this is the property that I own in Jacksonville, Florida. I live in Texas. I owned this property in Jacksonville, Florida, and many others while I lived in New York City, because I couldn't invest in New York City, nor could I invest in some of the towns around it because it was all so expensive. Why did I choose Jacksonville, Florida? I mean, there's other cities that are more profitable than Jacksonville. I chose there because that's where my network was, my trusted people that I relied on to be honest with me. So if you are in a crazy place where you can't invest and you're analyzing city A or city B, even if city A trumps the profits and you know people in city B, you're going to choose city B. Wherever you know people that you trust, that's where you're going to invest in. And if you don't know anybody at all, call me. I got plenty of people here in town, and I'll show you how to vet them, how to interview them. We can get you covered. Property managers, insurance people, all of those things. You'll have to have lots of vendors when you're a real estate investor. Think about local. Even if you're not thinking it's as profitable as other cities, it still might be because you can check on your assets. All right, the last one that we've got, number 7. Forgetting to negotiate. It drives me crazy. Oh, Andrew, I found this property. It was this and that and this and that. Oh, well, what was your offer? Oh, I didn't make an offer. Why didn't you make an offer? Oh, they were asking too much. That's not, no. Just because somebody's asking a price doesn't mean that's what you have to make it. All right, it's not your fault if somebody's asking too much. You still make an offer. I have properties that I own right now where I was the only person to offer because the asking price on the home was too much. And you better believe I stuck to my numbers. Remember those numbers we talked about before? I stuck to them. And because I stuck to them and I was the only person that offered anything, I had the property. Mistake number 7, you're going to make offers. Remember, I can't teach around fear. I can teach you other things. These are the 7 mistakes. Make offers. Make offers. I make about 100 offers a year. 100. And I do 2, maybe 3 properties a year. And I make 100 offers. Don't be afraid to make offers. All right. Now, I promised if this is your first time, we keep to 22 minutes or less so you can get back on with your day. So if you got here a little late, hey, thanks so much for being here. We keep every single one of these Drew 2s to 22 minutes or less. I certainly want to allow people to ask questions if they can. I do keep everybody on mute. So if you do have a question, unmute yourself to ask it. Let me see if I've got anything in the chat room. Oh, last slide, I forgot. So in 2 weeks, January 17th, 2 p.m., same time we always do it, I'm going to show you how to estimate your rehabs without a contractor. I'm going to share with you my spreadsheet. Yes, I'll provide you my spreadsheet for free. There's nothing being sold here. This is just free information. 2 weeks, January 17th, put it on your calendar. Reach out to me. There's my phone number, my email. All right, let's see here if I've got anything. Hey, long time no see. Hey, thanks for being here, Jeff. Appreciate it. Hey, Vicky. Hey, everybody. All right, let's see here. All right. Hey, if you're going to dinner, I want to go. Let's go to barbecue. Yeah. New to real estate, need help with new investment opportunity, look forward to connecting. Hey, all right. Hey, Venkat, if you want to email me, certainly we can share with you anything, I'm open book. Let's see here. Okay, good stuff. All right, great. Awesome. Hey, thanks so much, everybody, for being here. If anybody has any last minute questions, now is the time to unmute yourself. Otherwise, we'll send you on your way.
Hey, Drew, this is
Hi.
Shao.
Hi,
Oh, okay, sorry.
Go ahead.
Hey, Trish, I'll keep it short. What are your thoughts about multifamily investments?
Oh, I love multifamily investment properties. Okay, so specifically we talk about residential stuff here. So 1 to 4 unit. I don't delve in 5 unit or above for specific reasons, but 1 to 4 unit properties are wonderful. I live in Texas though. So in Texas, we don't have that many. Like when I lived in New York City, everything was multifamily up there because, a piece of land was like $1 million. Here, they'll put a single family home on an acre. They don't care. So single family, I think there's like 12,000 homes in the market here. Maybe 120 of them are multifamily. It's like very, very few. But in some markets, that's all that there is. If you have a chance to do multifamily, it's a great property to have. Absolutely. Hope that makes sense.
Sure.
Hi.
Thank you.
Thank you for
Hi.
asking.
Hi. This is
Hey,
hi. I'm very new to this. I've not even gone out. I'm looking at houses on Flipstar. Yeah. I don't even know what to say.
oh,
Yeah.
yeah.
That's my biggest problem.
No problem. So when I was new, I didn't know what to say either. So this group that we meet every 2 weeks, this is just like a general forum, okay? So if you want any questions answered, want to talk to me at length about, I'm an open book. I'll share with you everything that I know, and I can make it very easy to understand. No obligations, nothing like that at all. My phone number is on the screen. It's 817-380-1913. Just give me a call. That way we have more time to talk and we're not under pressure and open forum. Sometimes personal things come about. So there's my number in the chat room too. Just call me anytime and I'm certainly willing to help.
Thank you very much.
Thank you. Any other questions for the day? Thanks, everybody. 22 minutes or less every 2 weeks. Tune in next time and we'll cover how to make a rehab without a contractor. I hope to see you there. Have a great day, everybody. So long.
He said 19 what?
Thanks, everyone.